guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, owner of Mortgage Specialists. The markets are changing, and how can the seller help pay your closing costs for you? That's what we're getting questions on this week, and that is a good sign for buyers, as meaning if we're asking the seller to help pay for something in our transaction, it means the market's getting back to more of a normality and not such a huge seller's market. So that's what we're going to talk about today. It's been, oh gosh, a long time since consistently sellers have been paying some closing costs or costs for buyers. But before values start to drop, the first thing that occurs is buyers go in asking for closing costs and prepaids to be paid. And we're going to explain that there's limits on the lending side. And that's what we're going to talk about today is the limits that you can ask and how you go about asking the seller to pay those costs for you. First, seller paid costs is a word, but in the lending world, it's called IPC, interested party contributions, meaning anyone that's interested in that party that is contributing. So that still could be the seller, it could be the builder, it could be the real estate agent. All of those are going to contribute towards the max limit that's allowed there. So IPCs don't lower your down payment, or your seller's closing costs paying those doesn't help your down payment, but it does help your cash to close. And lately, let's say, if we can get the buyer $5,000-$10,000, that lowers how much money they need to save by 5 or 10,000, which is huge, and gets the markets moving yet again, because that's usually the biggest difficulty with first-time home buyers is saving enough money for the closing costs, prepaids, and the down payment, what we call cash to close. So the sellers can help with points, underwriting fees, appraisals, title work, taxes, homeowners insurance, nearly everything on the buyer's side as a cost or as a prepaid, sellers can help contribute and pay for. I.e., we'll talk about this a little bit later. VA loans have a little bit different challenge aspect to it. So let's first talk about the limits on conventional loans. If you put down less than 10% down, the seller can pay up to 3%. If you put anywhere from 10 to 25% down, seller can pay up to 6% of the sales price. And if you put down more than 25%, the seller can pay 9% of the sales price. Again, we generally don't see the thresholds of putting down a good chunk of money as a down payment to get a higher seller paid closing costs, but possibly could happen. Just wanting to know the tiers. So generally people know conventional is around 3%, because if you're asking for costs, you're probably barely scrapping enough money up to cover just the down payment piece as well. Also on investment properties, they will allow the seller to pay up to 2% of the sales price in closing costs and or prepaids. So the buyer still has to come up with their own down payment. The seller can't help with the down payment piece, but they can help with the closing costs, prepaids, and escrows. So FHA loans are a little bit different. Across the board, they're going to allow the seller or interested party contributions to contribute 6%. And VA, technically, you can pay for all the closing costs and then up to 4% on top of that towards prepaids, insurance, and pay off any debt. So VA is a unique animal in regards to paying off additional items besides just the closing costs and prepaids. And then lastly, we have USDA, which will be the same as FHA, matching that 6% of the sales price. So what are the issues with this scenario? Well, the issues are if the seller doesn't want to pay for your costs, they say no. Well, how do you ask the seller to pay your closing costs? You have to put that in writing with your offer. And so the reason why we're bringing this up is to remind real estate professionals and buyers out there right now that there are limits. So if you have $30,000 in closing costs, taxes, and insurance, you might not get all those paid for because of these lending limits. If you paid cash for the property, yes, the seller can help with whatever the case may be is, but generally you're wanting just a discounted price because you're not having to pay loan fees. So we have to get that in writing. You as the buyer and the seller agree to those terms on the contract, and that's what we present to underwriting to show how much the seller is going to help contribute. This happens a lot in Omaha, Nebraska. When markets start to slow down, people don't lower their prices, but they give out what's called incentives. So they're going to give the buyer an incentive. Hey, we'll give you some money to help do something to buy our house versus someone else's house in regards to that. Really, IPCs have been around a long time. They don't use those. They use the word seller pay closing costs, and hopefully you learned the basics about those today. It's not terribly complicated. They work very strategically well during a buyer's market or when a builder is giving incentives because the properties aren't moving as fast. We're seeing that market happen here locally. Nothing bad, nothing drastic, but there are some prices of homes that are still very high compared to what has sold. And a great agent will be able to look at the comparables, advise you on possibly what to offer, but then consider paying closing costs and asking the seller to pay those for you. I'm Brent Rasmussen. I'd love to hear from you. Comment below, give us a phone call, or check us out on our website at mtg-specialist.com. And our phone number is 402-991-5153. Have a great rest of your week, and we'll see you here soon. Mortgage Specialists. Driven, trusted, reliable.